Is now a good time to scoop up shares of Tesla. May 4th, 2023, 9:20 Central Time. Leading electric vehicle manufacturer Tesla has created massive wealth for long-term investors. Ain't that the truth? Since its IPO in July 2010, Tesla stock is up a staggering 12,450%. Let that sink in, fellas. If you were an early investor in Tesla, up 12,450% if you had the conviction to stay with Tesla throughout all of the fear, uncertainty, and doubt plaguing the media. However, in the last 15 months, a difficult macro environment has dragged Tesla stock lower by 60% from all-time highs, currently valuing the company at a market cap of $509 billion. Will Tesla shares continue to outpace the broader markets over time, or will it underperform peers going forward? Let's dive deep into the key trends and drivers that are likely to impact Tesla stock in 2023. The bullish case for Tesla. The undisputed leader in the EV space. Won't get no arguments here. Tesla continues to grow at an enviable rate. Despite a challenging global economy, Tesla's revenue was up 24% year over year at $23.3 billion in Q1 of 2023. Tesla's already got a lot of revenue, and to be up 24%, yeah, you could say that's enviable. Tesla and its peers are currently wrestling with the unit economics of their EV programs due to elevated inflation, lower consumer spending, and rising interest rates. Shout out to the 0.25 basis points increase that happened just recently. But Tesla is firmly focused on growing production, investing in autonomous vehicle software, and widening its product portfolio. The much-awaited Cybertruck is in the tooling stage, while the Tesla Semi is in the pilot production. Additionally, vehicles such as the Roadster and Robotaxi are in the development stage. The expansion of the portfolio comes with the expansion of their ability to not only produce but source batteries. Tesla is also rapidly growing energy storage production capacity at its mega factory while executing its product roadmap. Its energy generation and storage revenue was up 148% year over year, while services sales grew 44% in Q1 of 2023. What does that mean? Tesla's battery output has been growing significantly. In addition to all of the batteries that they're sourcing from third-party suppliers, they can't have enough batteries. They want all the batteries. Moreover, energy storage deployments rose by 360% to 3.9 gigawatts, the highest level of deployments achieved for Tesla. The supercharging vertical, which currently accounts for a small portion of total sales, is well poised to grow as Tesla opens up its network to include other manufacturers. All I hear is the cash register. The cash register is finna start going crazy. They have the best supercharging network, flat out, period. There's nothing more convenient. There's nothing more reliable, especially when you pair it with the ultra convenient, ultra reliable Tesla app. In Q1, Tesla produced a record number of vehicles due to the ramp up at factories in Austin and Berlin. The Model Y is the best-selling non-pickup vehicle in the US in the March quarter. Tesla is confident about growing production capabilities and is in line with the 50% CAGR, compound annual growth rate, target it had outlined in 2021. Compound annual growth rate. Over a multi-year horizon, Tesla intends to grow 50%. In 2023, it expects to deliver 1.8 million cars, sandbag number, indicating a growth rate of well over 50%. That's a base case, mind you, literally. Like 1.8 million, if they don't hit that, there might be some issues, but I have a feeling they're gonna be well in excess over 1.8 million, despite ramping up various different new technologies when you're talking about batteries, new product lines, when you talk about Cybertruck and the Semi, and they're building an entirely new factory. This is insane. The level of production coming from this company, the level of growth from this company has never been seen before. You've never seen anything like it. And if you have, put it below in the comments. I'd love to hear what you think is growing at a faster rate than Tesla. Tesla ended Q1 with $22.4 billion in cash and $5.6 billion in debt. Well, when you average that out, it seems like they're pretty cash positive, providing it with sufficient liquidity to fund its product roadmap, expansion plans, and other expenses. They have so much money right now. The rest of the industry has a right to be envious. While profit margins are under pressure in 2023, Tesla should benefit from economies of scale over time, allowing it to reduce the cost of operations. 100%. As they produce more and more of any of their products, they will find ways to make them better, considering they're the only ones producing these things at any kind of scale worth mentioning. They're going to be the first ones to notice, oh, we should be doing this better. Oh, we could easily do this better and increase our production, lower our capex, etc., etc., etc. Tesla's the only one producing millions of these vehicles. Millions. No one's even close. So eventually they'll get there. And as long as they can overcome the production challenges, which Tesla, they did that. They crawled through the hell that was production for the Model 3, and they have passed on those learnings to the Model Y. They will pass those learnings on to the Semi. They will pass those learnings on to the Cybertruck, and those will compound. Things that they learn from the Semi, things they learn from the Cybertruck, those will be passed on to their next generation vehicles. It also expects an acceleration in software-related profits, driving overall margins higher. This is full self-driving beta in a nutshell. I just signed up for the FSD beta program. I'm going to pay that $200 a month simply because I want to try the product, and I don't have full self-driving yet because I can't wait to display some of those videos on this channel. I do have the autopilot, which is magnitudes better than it used to be, and I can feel it. When you actually test out these products, the autopilot, and I'd imagine full self-driving beta is doubly astounding considering it'll go through the city streets. But on the freeways, I am the worst driver. Like, I'm definitely top 5. If you know me, I'm definitely top 5 in your worst drivers list. But with this software, my driving is improved tenfold. There's just no doubt that this makes me a better driver. Even as a driver assistance feature, there's nothing like it. $200 a month to make sure that I'm driving as good as I possibly can, that is worth it. Right now, I'm saying full self-driving, even though it is not autonomous level 5, is still worth $200 a month for its features. Now we got the bearish case for Tesla. We'll see how much of this I agree with, how much is reasonable, and how much is, farce. In addition to the current unstable economic environment, investors are wary of Tesla's steep valuation, falling profit margins, and rising competition. Let me go ahead and battle these things, right? If you think Tesla's valuation is steep after doing all your research and plugging in the numbers, I challenge you to really test your assumptions. Be like, what if? And then every time Tesla beats those what if statements and they achieve those statements, give yourself a little leeway and be like, maybe they can do what they're claiming to do. So challenge your assumptions when it comes to the steep valuation. Falling profit margins, you have to give a little context, give a little color. From where? They're in the mid-20s when it comes to margin, typically, right? And they're aiming for 50% CAGR. There's going to be times where it's less or higher than what they're anticipating when it comes to margins. The first quarter just happened to be a little less because they're trying to make sure that they sell every car that they produce by adjusting the price accordingly. 19% margins is nothing to scoff at considering they're leading the industry in profit margins. They have margin to play with. There's nothing to fear because they have the pricing power to make sure that they sell every vehicle. And in the process, they're going to damage the profit margins of everybody else selling electric vehicles who aren't doing them as efficiently as Tesla. I don't see a loss here. The lower profit margins, I'd love to see them go to 15% profit margins and then have the consumer be like, there is no way I'm buying anything but a Tesla because they are that cheap, and at that price, so worth it. And rising competition. Sure, the competition is producing electric vehicles, but they're not Teslas. I could go on and on about all the pros that Tesla has. And don't get me wrong, any electric vehicle is better than an internal combustion engine. It should be, in terms of software, performance, functionality, you name your metric. As the demand for EVs is all set to explode in the next 2 decades, try the next few years, new and legacy manufacturers such as Lucid and Ford benefit from a widening ecosystem. Tesla aims to increase sales per vehicle sold by focusing on ancillary services such as supercharging, software, and connectivity. Analysts tracking Tesla have a 12-month average price target of $205, which is 28% above its current trading price at this very moment. Price target tends to mislead people. Like, to me, it's what people determine is the fair value price for Tesla. If I told you my 12-month price target for Tesla is somewhere in the ballpark of $550, you might assume that that's where I expect Tesla to be. You would be mistaken. That is my fair value target for Tesla, the company. That's what I think each share should be worth, but it won't necessarily be there. And for me, as long as Tesla's current price somewhere in the 160s right now, I'm going to continue buying until they hit my 12-month fair value target of $550. If you're being conservative, so if Tesla were to skyrocket above 205, you'd be like, oh man, that's above the average consensus of Wall Street. But for me, I'm not listening to Wall Street because Wall Street is often wrong. They're often lagging behind most indicators. My indicator, if Tesla shoots up above 550, I must reevaluate for the next 12 months. I've also modeled beyond 12 months, and I kind of know exactly where Tesla will go, but I'll have to kind of adjust some of the prices. But that's, to me, what it is. It's 28% above the trading price right now. That's the 205 number. So even those numbers, highly conservative. That's a good place to start if you're looking for a conservative. Is Tesla too cheap? Is Tesla too expensive? To me, my 12-month fair value target is my indicator on whether or not I need to be buying right now. While its margins slumped in Q1, Tesla is among the most profitable auto manufacturers globally. Fact. This, coupled with Tesla's huge economic moat and leadership position, make it a top long-term investment. I intend to keep Tesla as long as I'm alive. They're gonna eventually stable off, I guess, in the next 20, 30 years or so, but there's so many products in their roadmap. There's so many industries to disrupt. I could easily hold this stock for the next 30 years and be like, still potential for growth, still potential for growth. So should I happen to pass before those 30 years, I will have explicit instruction to hold it for a certain time for my beneficiary in the future, whoever that may be. Tesla isn't going anywhere. That's going to be a growth story for decades to come. However, I believe at current prices, the stock is expensive. This is bar chart, not me. Besides having a very high price earnings ratio of 47, which which is 6 to 7 times the corresponding multiple of internal combustion engine rivals. Who gives a shit? Internal combustion engine rivals, they're not competing with Tesla in terms of a growth story. There's a reason why it's that much higher, because internal combustion engines have reached their peak in growth. They can't eke out anymore. They're a dying breed. There is no more room for evolution. The company just announced it was reversing its recently announced price cuts. This could hamper their growth, especially if there is a global recession, so I will continue to be patient and look to scoop up shares at lower price. If you're going to take bar charts advice on this, do so at your own peril. This is incredible. I couldn't imagine people in 2020 going, nah, I'll wait for it to drop lower. And we all know how that turned out. There was no waiting for it to drop lower. When we talk about the price cuts, which I think the media is too hyper-focused on how much these Teslas cost at this time, they're going to weigh all the options regarding pricing. I mean, major factor, how many cars are we producing, right? How many cars can we get into customers' hands at these prices? Well, the macroeconomic environment with the Fed rate increasing interest rates probably gonna make these cars more expensive on the financing side if people can even get financing. So we need to modulate these prices in order to make sure that the people that can afford them actually have a reason to purchase the product. Pricing is going to fluctuate rapidly, up, down, with so many factors stressing this, whether it be demand at the production rate, right? There is demand for the vehicles. If people can't purchase the product, they won't. They will wait. That doesn't mean demand evaporates. No, that means they're gonna wait for the economic pressures to alleviate. And warning, if you're planning on getting a Tesla, but you're like, I'll wait for the rates to drop. You know who else is planning on doing that? Everyone. And can you imagine what will happen when the rates finally drop? You will purchase a Tesla, but wait times will blow out because now everyone is like, I guess I'll purchase my Tesla now. And then you're gonna be like, oh, expected delivery date 2 weeks from now. Expected delivery date a month from now. Expected delivery date 6 months from now. Because everyone's deciding to buy their Tesla now. The interest rates are dropping. The IRA tax credit's in effect. Oh, wait. Tesla doesn't, the wait times, they're not producing enough. Guess what? They have to raise prices again dramatically to ebb the flow of production, right? So and luckily they're ramping up factories in various parts of the globe right now. So their production hopefully will keep pace. Battery production, vehicle production. All of this stuff must be executed like a well-oiled clock. Every gear must be in place, lockstep, to keep prices from fluctuating so rapidly, right? But you have to make sure all of this stuff is good. That's why the company is so brilliant. You don't see any other automaker having to deal with this because there's no other automaker at this stage of the game right now. There's no one as well positioned as Tesla to know exactly what they should be doing. And for the analysts on Wall Street to be like, I don't like that. Well, you've never had to deal with this problem before. Let's be real. Let's be honest. Tesla has the data. They know exactly how many people are ordering week to week. They know exactly how many batteries, cars are being produced. They know exactly how much the materials are gonna cost to put these in. They're like looking months in advance for material costs, right? To make sure that their CapEx is where they need to be so that they can execute on those margins. We've seen examples of this during the supply chain hell that COVID created. I have the utmost faith in Tesla because of their past performance. And that's all I can go by, is their past performance. Well, there you have it. This article sums up the bull and bear case pretty accurately. I've kind of given you my take on both sides. Granted, like I said, the average fair value target for most analysts on Wall Street happens to be at 205. That's the average. You got ARK weighing the top end, and you got other research firms kind of weighing at the bottom, and you're getting this 205 everywhere in between. So if it's below 205, which is significantly higher than where Tesla is now, I don't see how you can't buy. If you have your own research and you kind of know where your own 12-month fair value target is, you know exactly whether or not you should be buying, you know? And if you've done your research far enough, you know that there is no reason to sell Tesla stock. There may be reason in the short term if you have options activity. If you want to have a dated option, say you have something that's going to expire next month. If you think Tesla is going to fall due to the macroeconomic environment and you feel comfortable that it's going to reach X, you can go ahead and place an option, place your bets, you know, and see if you're right. But there is no reason, I repeat, no reason to be selling Tesla stock at these levels. If you're going to place long calls, I would say that if the average has in 12 months at 205, placing a long call for the year of 2025, somewhere in that area, I think you'd have a safe bet if you have an at the money call, because Tesla will not stop growing. They are going to continue growing because they have goals. By 2030, they want to be at 20 million vehicles per year. Now, people can laugh at them again, but just like when they laughed at them back in 2012, when they were like, 500,000 should be where we're at in 2020. People laughed at them then. Now, can they possibly get to 20 million? Oh, let's just say Elon's done the impossible a couple times now. Track record speaks for itself. I'd say let's see if it plays out. My only advice is entertain the idea. Even if you don't think it's possible, entertain it. What would your models look like if they sold 20 million vehicles in 2030? That's just the vehicle aspect of it. We're not even talking about the energy. We're not even talking about the robo-taxi capabilities. We're not even talking about Optimus. There are so many irons in the fire. It's hard to keep track of them all. It's easy to lose sight that Tesla is not just a car company. And in 2030, you think their evaluation is high because it's so much greater than the internal combustion engine market? Yeah, prepare to have your socks blown off because it's going to look ridiculous in 2030. All right, that's pretty much all I got for you guys. Be easy. Peace.